One of the simplest and easiest ways to build a passive stream of income is through dividend shares. But how do you put together a profitable dividend portfolio? Today, I'm going to share exactly that with you. How's it going, guys? Ryan here with another investing video, and today we're talking about how to put together a profitable dividend portfolio, which is something all long-term investors would absolutely love to do. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm, and subscribe for more stock market investing content. And we talk about financial management, wealth management, all that sort of cool stuff as well. So hit subscribe if you're into that. And leave down below a comment on any tips you have on investing in dividend stocks. But without further ado, guys, let's get straight into the video. And as I mentioned, profitable dividend portfolio. What is a good strategy for putting that together? Well, let's kick it off with step number one, identifying stocks with a good track record. What you want to do is find those stocks which A, put out consistent dividends every year, and B, dividends which are increasing year on year as well. The longer period that these stocks are putting out dividends and the more they increase year on year, the better they will be. Effectively, not only then are you investing in stocks which are allowing you to receive dividends every year, these dividends will continue to grow over time. And that is effectively in itself growing your portfolio on a natural basis. The second thing you want to look for is financial stability. And financial stability really comes down to, is the company turning over a consistent profit every year? If that profit's growing, fantastic, but we're not necessarily looking for those stocks which are growing in value. We just want to make sure they're stable and able to provide their investors with dividends on a relatively regular basis, and more importantly, on a consistent basis. That is crucial. If they're growing, as I mentioned before, in dividends payout every year, fantastic. That is going to help you out as an investor so much. But financial stability, absolutely critical, because effectively what you're looking for there is stocks which are not going to tank at some point and stop paying out their dividends. The next thing you want to look for, and this really comes down to how you put your portfolio together. And it's something I typically don't do for my normal investments, but when you're talking dividend shares, it's something you really want to do. Diversity. You don't want all your stocks to be in the same sector, and you want a broad range of stocks. So touching on the first point, if you invest just in one sector, let's say you put together a stock portfolio of 20 to 30 stocks and they're all oil and gas stocks. That means if the oil and gas price drops, all your stocks are affected. That is not what you want. You want to put investing that sort of money across lots of different sectors. That means if one goes down, it's probably going to be offset by another one going up, so your dividends shouldn't be affected. As I said previously, we're not looking for stocks that are growing in stock price value. We're looking for stocks which are consistently paying out dividends to their shareholders, and dividends that are hopefully growing. So the share price in this situation really does not matter, but the dividends do. So if you've spread it out across various different sectors, you're less at risk of losing money when something affects that sector in particular. So for instance, if I was putting together a portfolio, I would be investing in different areas such as finance, biotech, mining and minerals, energy, all those cool different types of sectors, and I'd be picking those stocks, as I mentioned previously, with that good track record of having consistent growth as well as consistent output of dividends every single year. Now, touching on the second point, and that was across different stocks. You don't want to be not diversifying across different stocks. So, how do I put that in basic terms? Well, effectively it means you want 20 to 30 stocks. You don't want 5 stocks. Diversify across those stocks, because if something happens to one of those stocks and you only hold 5 stocks in that portfolio, then your portfolio is going to be severely impacted by that one stock that is concerned. Effectively, if you're diversifying across a large number of stocks, that means if one's affected, the impact is not as significant, and it's more likely than not, once again, going to be offset by another stock. So 20 to 30 stocks is probably the ideal amount. You'd be looking at, 4 to 5 per sector, and that would give you a good coverage over your portfolio for those dividend paying stocks. Now, the fourth point, and one of the most important points for consistent growth of your dividend portfolio. This is really what's going to make it profitable. Reinject your capital. You want to be putting that money that you have invested back into it once the dividends are paying out. You're reinjecting the capital back in. Effectively, what you're doing is growing your stock portfolio through the dividends that are paying out for you, rather than having to put your own money in. In saying that, you also want to be injecting your own capital on top of the capital you're reinjecting from the dividend paying shares. So basically what you're doing is you're allocating a larger sum of money at this time. It's a two-pronged approach. So for instance, if you have a full-time job, allocate 5%, 10%, whatever it may be, however much you can spare to your dividend portfolio. Then on top of that, every single time you get paid out a dividend by those companies, reinject the entire amount back into that portfolio. Effectively, the aim here is to build up your portfolio over a period of time to a point where it's making a decent bit of money, and ideally where it could one day replace your income and you can retire and live off those dividend paying stocks. That is the ultimate goal here. Or potentially, you might want to delve into other avenues such as real estate and those sort of things. It could assist you in that sort of sense, and you can keep your full-time job and effectively you're earning two full-time incomes for the price of one, because you're not doing too much with those dividend paying stocks because they're paying you for just purely putting your money in them. And with that, guys, that is the video wrapped up for today. If you did enjoy it, please remember to give me a thumbs up. As I said before, it helps me out so much. I appreciate it, guys. And leave down below in the comments section what your tips are on putting together a profitable dividend portfolio. And if you haven't already, remember to subscribe. With that, guys, hope you have an awesome day. See you next time. Cheers.